Hello everybody and welcome once again to the weekly review from forexlivetoday.com. Today is Saturday, June 25th, 2011. Okay, we've got a lot to get through, so let's get started straight away. EUR, USD, Euro dollar. Okay, so this is almost like fundamental overload at the moment. So we've got Greece, which I'm sure you're all aware of. We started the week with the meeting, then we have a confidence vote. It's every day we've got announcements, fears arriving, an announcement allaying the fears build up again, another announcement. Going ahead, we have the austerity has to get through. They have to approve something like $71 billion worth of savings. We've got the private sector. They all have to agree to roll over the debt. So it's going to go on and on and on. So early on in the week, if you can remember from last weekend, we were holding short over the weekend, and as soon as there was no immediate resolution or no immediate agreement, the euro dived. We quickly took our profits there, and we have not traded the euro since. And if you look at the chart, you can see why. The volatility is not really taking the euro anywhere. It is just chop, up and down, hourly candles going in opposite directions. If you are a scalper or a short-term trader, perhaps you are loving this volatility. But we prefer to trade on fundamental and trend, technicals and everything aligning a little bit longer term. So although it is exciting to watch and we are very interested, we're not taking part in the euro at the moment. However, a break out of this triangle and then a break below 140, we will start to get interested again. One thing to note, we're not taking any longs on the euro. There is absolutely no reason we can see to be long the euro. Not only is Greece an ongoing soap opera, but we are having contagion, and everyone's focused so much on Greece. Ireland, Portugal, Spain and Italy are all going unnoticed in the background. So even once Greece starts to get sorted out, these other countries are going to come to the fore. And why isn't it being reflected? Why isn't all this mess being reflected in euro dollar? Well, it's to do with the dollar, with the US dollar, and the fact that the short-term interest rates in the US dollar are still so low. They're like close to zero actually, the LIBOR rate, the short-term interest rate. So until that starts to rise, until the yields also start to rise, on the T-notes, on the bonds, we're not going to see this, want for the US dollar. So this is perhaps some of the reason why you look at euro dollar and you're not seeing any trend whatsoever. You're not seeing anything to the downside. It's just chop up and down in this triangle. Because if you look at our next chart, which is Euro Swiss, and you can see that the euro has a steep downtrend against a stronger currency, or the strongest currency at the moment, the Swiss franc. So you can see that this is weighing on the euro, but it's just the fact that the dollar, the situation with the dollar and the US economy is in such a state as well that you're not seeing the big movements. So this is why keep an eye on this and pay attention to all the fundamentals, but perhaps look for these alternatives. Think of a stronger currency to trade against the euro, especially if you're bearish like we are. Okay, so moving on, and again focusing a little bit on the US dollar, we have Kiwi dollar. Now, anyone who has been following the website or these videos knows that we are currently short Kiwi dollar. Now, it's a bit of a risky position because I've just given you lots of reasons why the US dollar is not showing strength at the moment. Also, Bernanke gave one of his famous speeches this week, and he mentioned that the rate will not be going up for quite some time. So there's no real impetus here for the dollar. It's going to be all to do with the capital market, to be honest, and the need for liquidity that's going to push the US dollar before any increase in rates or any fundamentals like that. So back to trading anyway, and Kiwi dollar, yes, we are short. We're not underwater really at all at the moment. We're just about at break even. But it is a risky trade because it's not with a trend, it is going for a reversal. You can see that it is rolling over here. Back a couple of weeks ago we have had bearish engulfing candle here, another one was back here. We've had new lows down to here. So there's reasons to be bearish. However, it is a risky trade because it's betting against the Kiwi, which is a very strong currency at the moment, but it's our opinion that it's overbought. So how can we hedge a little bit this risk? Well, that would be dollar Swiss. Again, the Swiss franc, there's an argument that it's very overbought, but currencies, just like stocks, can stay overbought for a period of time, an extended period of time. So this well-defined downtrend that we've been talking about for months, no reason to go long, but because we have gone long the dollar against the Kiwi, because we think the Kiwi is overbought and a reversal, so to hedge it, let's go short dollar Swiss. And as you can see, the whole week it has continued down. We actually had a limit to buy this at the lows if it broke the lows, and late Friday, quite surprisingly, that limit was hit. So there you go. So there's profits continuing to mount up on this trend. All the while, we are positioned for a longer term move here. So these are the type of things. Think strategically like this. Cable, pound, dollar. There was a bit of a celebration here at Forex Live today this week because about a month ago there was some discussions here amongst the guys that we would see 159 in a relatively short space of time. Personally, although I could see the possibility for it, I was rather more conservative, and I think I took my profits around about this level here, so a good 350 or so pips higher than this. But a couple of the guys have held these positions all the way and have just taken their profits on Thursday, I think it was. So yes, a good week for the office here. However, you can notice here that the pound has been extremely weak. So we have come off over the past month or so, close to 650 or so pips. At a critical point here, we've broken this channel. We've broken one set of support up there, so we're now sitting at this 159.70, 159.80. It's been key support. So if this goes, there's even further risk to the downside here. So something to look out for there. Dollar yen, pretty much same here. This standard deviation downtrend that we've put in here, once again it kind of went up and touched this line, so it's almost like it's starting to really compress now. Not really trading this one at the moment. However, we are trading a dollar yen. Again, it's trying to break down. We are quite confident that it is going to break down quite considerably here, even though we are at three points of support here. We do favor the downside, so we have already positioned short, very small, so we will add to the position as it goes down, if and when. We prefer that to the Aussie dollar, which is also trading within its triangle, and there's also considerable potential to the downside, but out of the three pairs of dollar yen, Aussie yen, and Aussie dollar, we prefer the Aussie yen, but you may have another favorite. We're already exposed to the US dollar through the Kiwi dollar short, so that's why we've positioned with the yen here also. But that's looking good for a breakdown. Okay, on to dollar CAD, and a big green candle on Friday. A little overdone, I would have thought, because even though the markets sold off heavily early on Thursday, so that would have been the UK session, it was bought back in the US session, again on some of this Greece fundamental news, but the fears certainly came back on Friday, and the markets dropped once again, and it was really confirmed on Friday, the move, more so than it was on Thursday. So look, a break above the 200-day moving average, the highest close for quite some time, since March. So things are looking good for dollar CAD, which means things are looking bad for the equity markets. And even though I don't have the charts today, but if you look at the SPX chart, you can see it's very close to its critical resistance. DAX, FTSE, Nikkei, they're all a little further off that critical resistance, but if we do get that global move down, like I've been saying for a long period of time, then we could start getting the dollar moves that we're looking out for. Aussie Swiss broken this horizontal support, and next support looking to be this bottom of this wedge here. So perhaps next week that's a trade to look out for, a reversal of this wedge here, a possible trade scenario there. Swiss yen, we highlighted this last week, a break and a retest, and a beautiful trade that was too. Hope someone took it. And I think, and finally we have Euro Pound. We have the descending wedge at the top of this range, so perhaps we have possibility for a short here. One more I'd like to highlight actually is here, Aussie Kiwi. We have our inverted head and shoulders possibility here, so keep an eye on that. So many opportunities out there, but just remember, if you're exposing yourself to risk, perhaps think about how you can hedge it. If you don't want to trade the US dollar, or if you want to trade the euro, look for some of the other crosses, Euro Swiss, Euro Yen, Euro Pound perhaps. You don't have to stick to the majors and trade the euro dollar. Don't forget, check the website for all of the news regarding Greece. Here you can see Greek jitters. It's still, the story of the moment. But sometimes too much fundamental news like that just causes volatility and chop, and we get no real trend. Okay, have a great week, guys. I'll see you all next week. Good luck.